Good morning, good afternoon, good evening, good day. Just depends where you are and when you are listening to or watching this broadcast. My name is Clara Lyons-DeVaughn. I am the broker owner of Lyonsview Realty. We provide residential, commercial for small businesses and nonprofits and property management services. I just want to welcome you today. Financial Fridays, we stream live every Friday at 9:30 a.m. Eastern Standard Time. And you can catch the replay anytime on YouTube. So be sure to like and subscribe to our YouTube channel at Clara Lyons-DeVaughn. Would really appreciate that. And definitely share this broadcast with other people because Lyonsview Realty, we provide resources, information, and tips to assist you in making the best financial decisions. So let's get into it. Today, we are talking about stewarding your resources. And in previous broadcasts, and we can go back and check those out, we talked about one, writing down all your expenses for at least 30 days, right? Do it daily, do it as it happens. You can do it on a notepad, you can do it on an e-app, but just do it. And you'll be surprised at the amount of money you are spending, but it really gives you a conscious awareness in terms of where your money is going. And then the second step was to identify those things that you no longer need or that no longer serve you and eliminate them. Eliminate them. Reduce your spending. In order to reduce your spending, you have to know what you're spending. So you've identified what you're spending. You're going to go back and eliminate, delete, cancel whatever you need to do, those subscriptions, those memberships, those recurring expenses that you forgot about. Take them out and give yourself time to do that. The ones you've done that, you're going to get to what we're going to talk about today, which is reducing your debt. So you probably noticed as you were writing down all of your expenses, and that included your credit card expenses. Those things that you charge to credit cards, some of those things came out of cash, but we're going to deal with the ones on your credit card. So your credit card expenses, you want to go through and write down the credit card person, the interest rate that you are paying. You want to write the amount you pay in interest every month, and you want to write the minimum payment that you pay every month. So go down, make a list of all of your credit cards, all of your interest rates for those credit cards, the interest that you pay every month on those credit cards, the payment, the minimum payment that you have to pay on those credit cards, what your limit is on that credit card, and how much you currently owe. Like what's your maximum debt at this moment on that credit card. And then the first thing we want to do is we want to calculate your utilization. How do you do that? You take the amount that you currently owe. So let's say for this month you owe $3,000 on that credit card. And let's say your limit on that credit card is $10,000. So you're going to take that $3,000 divided by that $10,000 or that $6,000, whatever it is, and that'll give you a percentage, and that's your percentage utilization. And you're going to record what that number is, right? So now you have the amount that you've paid every month, the minimum, the amount of interest you pay, add those two together, that'll give you your total expense for that card. Like a lot of times people just look at their minimum payment. It's not just that, it's the interest that you're paying on that as well. Those two together, right? So you have what your current balance is on that card and what your total limit, the max that you can charge up to. So to get your utilization, take what you owe right now, divide it by the amount that your limit is for that card, and that'll get you your utilization as a percentage. So the goal is you want that utilization to be 30% or lower. If you're over 30% on that utilization, that's a card that you want to focus on reducing that debt. But I want to talk too about kind of that's just to get the information to make the decision, right? That's the first step. You need the information to make the decision. So as you're looking at that list, you'll notice a couple of things. You may have a high interest rate on a card, but what you're paying monthly on another card with a lower interest rate is a lot higher. So that's money going out the door every month, right? So you want to pay attention to both of those two things. And when you're making the decision on how you want to reduce that debt, you may want to say, hey, this one is costing me with interest and my minimum payment. It's costing me a lot more per month than something else. So I might want to focus on getting that one down before I focus on getting one down with a higher interest rate, right? And how do you reduce your credit card debt? So one way you can do it is you can transfer a debt of a higher interest credit card to one with a lower interest rate. A lot of times you might get things in the mail for a 0% interest rate. Take it. Or a reduced interest rate, a lower interest rate. Take it, transfer that debt over to that lower interest rate credit card. That's one of the biggest mistakes that I made, because when I went and made my list of what I was paying in interest and also combining that with my minimum payment, I was like, wow, I'm paying a lot per month on this card. And I may not be able to pay the entire amount off right now, but I can reduce my monthly expense by transferring that debt over to a lower interest credit card, right? So that's number one. You want to look at any time that you have the capability to reduce that interest rate, you want to do that first on any outstanding debt that you have. The next thing you may want to look at is paying off the lowest balance, right? That's called the snowball method, right? Where you take that lowest credit card, you say you only owe $300. So you pay off that $300. Now you have that money available of what you were paying on that to apply to another debt, right? So the next one, maybe with the highest interest rate, you take whatever you were paying on the one you paid off, add that to the minimum of the one that you want to pay off with the higher interest rate. And now you're making a bigger dent on the next credit card debt that you want to attack. There is a philosophy. They want to pay the highest interest rate one off first. But if you owe a lot on that card, it may take you a while. So I would definitely suggest that you look at what you're paying in interest, what you're paying as a minimum payment, and what that total expense is, and focus on the ones with the highest total monthly expense first, right? Focus on those first, because your goal is you want to get that debt for each card under 30%. And let's say that's too overwhelming. If you take your total debt for all your cards, add them up, what's your utilization for everything? Get that number under 30%. That means that you may have some that are paid off. You may have some that are over 30%. But overall, if you look at your full debt picture, you're under that 30% utilization. And then you can go back and attack specific cards to get each one under 30%. And of course, if you get each individual one under 30%, your overall is going to be under 30%. But there may be some that you can pay off in their entirety, right? So you want to try to tackle those first. But your goal is to get to 30%. So if you're over 50% utilization, get to 50% utilization, right? Then get it down to 40% utilization, then get it down to 30% utilization. And for those cards that you can, get them to 0 utilization. If you don't need to use those cards, if you're doing it for points, put a charge on that card and pay it off the next month, right? Pay it off in full the next month. That'll do major things to your credit score. But your goal is you really want to reach below 30%. So I covered a lot of information. I'm going to recap slowly. 1, write down all of your credit cards, who you're paying. write down their interest rate that you're paying them. So it could be 10%, 25%, 27%, God forbid, 30%. That's kind of high. But you want to write down what percentage you were paying them. You want to write down what your minimum payment is to them. You want to write down what your interest that you're paying every month, the highest one. If you have to average it, just take the highest one, the highest interest rate that you've paid to that credit card. Add those two together, and that'll give you your total monthly expense for that card out. You want to write down what your credit limit is for that card, and you want to write down what your current balance is for that card. That's the first step, just capturing all the data, right? Once you've captured all the data, you want to calculate your utilization, and you get that by taking what you owe and dividing it by what your limit is. That'll give you your percent utilization. And then the third and the last step is you want to develop a debt reduction plan. And it's different for everybody. For me, I looked at what was costing me the most every month out of my pocket. When I added up that interest payment and that minimum payment, what was costing me the most monthly, and I attacked that as I labeled that was my number one. So I put the order in which I wanted to attack the debt for my credit. Then the next thing that you want to do, if you have offers to reduce your interest rate on those cards, look to see where you can reduce the interest rate while you're paying it off. So if you can get a break for 6 months or for 12 months and get a 0% interest rate, then you eliminate that interest that you're paying every month, and that's additional money in your pocket. So that's the second thing you want to do. And the third thing you want to do is try to either, if you have a low card, that you don't owe a lot, pay it off. Or if you have a higher interest card that you're trying to get it down, pay that off. So it's up to you which strategy you want to use. But the goal in this case is to get down to under 30% utilization. If you're higher than 50, get to 50, and then work on getting to 30, and then eventually you'll get to 0. So we are on this being steward of your resources. It's very, very, very important because you want to focus on what your money is doing for you. What your money is doing for you. Goal is to write it down. Write it down first, which all of your expenses are, and you want the goal of doing that for 30 days. Identify what you no longer need. And the goal is to get rid of those things that no longer serve you or are useful to you. And then this third thing, you want to reduce your debt. And the goal there is to get your total debt and get your debt per card down to under 30%. So I just want to thank you for tuning in today. It's been a blast. I know that you are working on being a better steward of your resources. Join this journey with me because I'm on the journey as well. And tune in to Lyonsview Realty Financial Fridays. Next Friday, we provide you with resources, information, and tips to assist you in making the best resources. And here at Lyonsview Realty, we provide you with ESP, that is expertise, solutions, and patience before, during, and after a sale. We assist sellers, buyers, and investors build wealth, and real estate professionals build careers in real estate. Real estate is the number one way that you can build wealth in these United States of America. So I invite you to join on that journey. And I really want you to have a Lyonsview lifestyle. And what is a Lyonsview lifestyle? It's when you actualize your dreams into reality. It is the possibility of what's available when your life is in order, when your finances are in order, when your health is in order, and when your spiritual mindset is in order. That's very, very, very important. But join us again next time. My name is Clara Lyons-DeVaughn. We stream live at 9:30 a.m. Eastern Standard Time. Check us out on YouTube, like, share, and subscribe. And most definitely, keep living your best, your best, your best life.